Thanks everyone for introducing yourselves in the chat. For those who have just joined us, please introduce yourselves in the chat. Thanks, Alice, Trisha, Rita. Thanks for joining us. As we wait for a few more people, I can take us through the agenda. So we have a very detailed agenda, as you can see. So we're going to start with an introduction to fraud in nonprofits, followed by ethical, financial, and operational impact of fraud, followed by most common types of fraud in NGOs, then indicators of fraud in nonprofits. Then we'll talk about a case study of a donor fund misappropriation, and then stages of procurement where fraud is likely to occur, common procurement fraud schemes, designing control to detect and prevent procurement fraud, indicators of project fund management fraud, best practices in project budgeting to prevent fraud, best practices in project disbursement to prevent fraud, importance of segregation of duties in project management, common types of payroll or HR fraud in nonprofits, and HR-related red flags of fraud. And then we'll end with a summary and a Q&A session where we'll discuss any of the questions or concerns you have relating to nonprofit fraud or relating to any of the future webinars we have in this series. And now I'd like to take a moment to introduce our panelists for today. Our first panelist is Zahir Sheikh, who is a partner of Risk Advisory, Internal Audit and Forensic Services here at BDO East Africa. He's a dynamic leader with a high public profile and has been a market leader in his chosen markets and services. He was a regional partner responsible for financial advisory services at KPMG in East Africa. And he has over 30 years of experience, 7 years in the UK, and 24 years of experience gained at KPMG in Kenya. He established the first forensic practice and unit in Kenya with over 25 full-time forensic specialists. As regional partner of the Forensic Services Business Unit, Zahir has been involved in managing large, complex investigations, providing expert testimony in court, testing and designing internal control systems, and much more. Thank you for joining us, Zahir. Our next panelist is Roger Muir, who is the Manager of Forensics, Internal Audit and Risk Advisory at BDO East Africa. He's a forensic audit investigation, internal audit and risk advisory professional with over 5 years demonstrated experience in several industries, including nonprofits, FMCGs, higher education, manufacturing, logistics, and financial services. He has a strong track record in managing critical and high-level forensic investigations and internal audits and delivering practical, fit-for-purpose solutions to organizations that enable them to detect, prevent, and mitigate fraudulent activities. He's also highly skilled in developing fraud risk assessment frameworks, drafting policies and procedures, and forensic imaging and analysis from suspect computers. He holds the title of Certified Ethical Hacker and is an associated member of the Association of Certified Fraud Examiners. And next, I'd like to introduce our new panelist, Nicholas Miner. He's a senior in the Forensic and Internal Audit and Risk Advisory Department here at BDO East Africa, with more than 4 years of experience in cyber forensics, handwriting analysis, document examination, and criminal investigations. He has a proven track record in conducting forensic investigations through background checks and due diligence, forensic data recovery, fingerprint analysis, and ensuring the legal compliance of forensic evidence. He's a highly skilled forensic expert with a solid academic background, and he has further enriched his expertise with certifications in data science, machine learning, and artificial intelligence, forensic accounting and fraud examination, and international criminal law. Nicholas is dynamically skilled with the ability to integrate the multidimensional skills he possesses. This unique capability enables him to deliver high-quality outputs with multifaceted interdisciplinary applications, thus enhancing his effectiveness in detecting and preventing fraud. And now I'd like to hand it over to Zahir to introduce this webinar to us. Thank you.
Thanks, Meha. Before I start, perhaps what I'll do is just talk a little bit about BDO. Do we have the video slides today, or did we miss those out? I think we don't have them, but I'm going to talk about.
But you can just go ahead and introduce BDO.
Right. Okay. All right, folks. Right. So basically, BDO, for those of you who may not know BDO, is a global advisory and audit firm. We have a presence in 166 countries. Last year, our turnover was in excess of 14 billion US dollars. We employ more than 115,000 professional staff worldwide, and we are growing rapidly. Within East Africa, we have offices in Kenya, Uganda, Tanzania, Rwanda, and Ethiopia. We're also opening offices in Somalia in the next couple of months, and we're also opening offices in DRC and Burundi. The unique thing about our East African cluster partnership is that we share the same systems, the same technology, and so on and so forth throughout. And therefore, this means, that you can talk to any one of us. We have the same training, the same standards, and of course, this applies to BDA globally as well. But I think the unique thing about the East African cluster is we are on exactly the same platforms, which means it doesn't matter who you're talking to. You get a seamless service throughout East Africa. We provide services in audit, in tax, in advisory, and BSO. In audit, we provide the standard statutory accounting services. We also provide services to donor organizations and special audits. We provide training for IFRS, and so on and so forth. And then in tax, we provide a whole range of compliance services, and then we also provide tax advisory services, such as services on international taxation, services on expatriate taxation. We also provide services on legal tax disputes, where you have disputes with your revenue authorities, and so on and so forth. And we have a solid transfer pricing department that can provide a whole range of advice on transfer pricing. In our BSO division, we basically provide a whole range of outsourced services. So things like payroll management, accounting, we can do your accounting for you. We can manage your payroll for you. Uh, we can provide company secretarial services. Indeed, we act for company secretaries for several hundred companies, including some very large companies. We provide a whole range of financial management services. Yeah, and we also provide legal services. And then we also provide internal audit as an outsourced service. And then on the advisory side, we provide a whole range of services such as risk management, if right from strategy all the way down into operations. We also provide internal audit services. We provide technology advisory services. We have a whole department that provides forensic services, including fraud investigation and fraud control and fraud management services. We also provide services for ESG, which is environment, social, and governance, or sustainability, as we might call them. And then we provide technology advisory services, including things like cybersecurity services. And we also provide AI support services, and also on data privacy and data governance. So now, moving on to today's topic, I guess we can perhaps move to the next slide. Right. So let me start by talking about fraud and what this is. And obviously, we're going to be talking about occupational fraud. So fraud is any activity that relies on deception in order to achieve a gain, a financial gain. And it becomes a crime when it is a known misrepresentation. So you're either misrepresenting the truth, or you're concealing a material fact. And the idea is to induce another party to act to his or to her detriment. So If you lie in order to deprive a person or organization of their money or their property, you are committing fraud. And occupational fraud is defined as the use of one's occupation for personal enrichment through the deliberate misuse or misapplication of the organizations, the one that's employing you, their resources or their assets. And we already know that this kind of fraud is perhaps the most costly and the most common form of financial crime in the world. I mean, there are two reasons why this type of crime is so prevalent. First is that any organization with employees must, to some extent, entrust those employees with access to and control over its assets, whether that means keeping its books of accounts or managing its bank accounts or safeguarding its inventory and so on. It is this very trust that can make organizations vulnerable to occupational fraud because all frauds at their very heart, they are based upon breaches of trust. And the second reason that occupational fraud is so costly and common is that there are simply so many people in a position to commit these crimes. If you look at the global labor force, this consists of more than 3.3 billion people, a large majority of whom will never steal or abuse the trust of their employers. But even if a tiny percentage of these individuals cross the line, the result is millions of occupational fraud schemes being committed annually. Next slide, please, Roger. So I think what we can do now is look at the ethical, the financial, and the operational impacts of fraud in non-profits. As we know, fraud can have profound and multifaceted impacts in a variety of ways on non-profit organizations. It can affect them ethically, financially, and operationally. And understanding these impacts is crucial for stakeholders to recognize the importance of fraud prevention and detection. So, beginning with ethical impacts, first of all, there is the erosion of donor trust. Nonprofits rely heavily on the trust and generosity of their donors. Fraud scandals can severely damage donor trust, leading to decreased donations and support. Then there is undermining of the stakeholder confidence. We know fraud can undermine the confidence of beneficiaries who rely on the non-profit services, potentially leading to a reduction in engagement and support. And then there's also the question of decreased employee morale. So ethical breaches can demoralize staff, leading to decreased productivity and increased turnover. Employees who are affected by this may feel disillusioned and they will start to distrust the leadership of the donor company or of the NGO. And then you've got financial impacts. The first one is direct financial loss. We all know that fraud leads to immediate financial losses, which can be particularly damaging for non-profits who already have resource constraints because they may not have enough donations in the first place. Then there's the question of the loss of grants and funding opportunities. We know fraud incidents can lead to the loss of existing grants and make it challenging to secure future funding. Then there's also the question of program cuts and delays. We know financial losses from fraud can force nonprofits to cut their programs, to delay initiatives, or even to scale back the level of services that they provide. Now let's look at some of the operational impacts of fraud. First of all, there's the disruption of services. Addressing fraud requires resources and attention that would otherwise be dedicated to the organization's mission, leading to a disruption in services. And then there's also the question of diversion of resources. We know that resources that would otherwise be used for mission critical activities, they would be diverted to address the fraud. And for example, you need to do investigation, you then need to do an audit, you need to deal with the lawyers in legal proceedings, and so on. And finally, also, it could lead to long term reputational damage. We know fraud can cause long term damage to the organization's reputation, making it difficult to attract donors, partners, and volunteers in the future. And of course, it could even lead to loss of staff. I mean, staff may become frustrated and disillusioned after a fraud incident. They could feel that their hard work has been undermined and the organization's leadership has failed to protect all of the hard work that they've put in. It could also lead to terminated employees. So we all know once a fraud happens, the organization will need to terminate certain employees, in those who are involved directly in the fraud, and maybe even those who may not be directly involved, but they simply significantly contributed to the fraud because of lapse in knowledge. They didn't put up systems and so on and so forth. So it could result in some serious gaps. Next slide, please. Yeah. Now, here I want to spend some time looking at the most common types of frauds in non-profit organizations. We need to understand this because it's only through understanding, how NGOs and non-profits lose money can we actually do something about it. So we'll start off with asset misappropriation. Misappropriation. This occurs in 86% of the cases. Why is it so common? We know it's common because of the significant amount of cash, donations, and valuable assets, such as supplies and equipment, which nonprofits usually handle. Often, NGOs operate with limited oversight and internal controls, and this makes it easier for individuals to misappropriate those assets without immediate detection. How does it occur? This type of fraud typically occurs when employees or volunteers have access to cash, inventory, or other valuable assets, and common methods will include the outright theft of cash, misuse of organizational vehicles or equipment, and unauthorized sale of donated goods. To conceal their actions, the fraudster might manipulate records such as inventory records. They might create false documentation to hide their tracks, or they might even collude with external parties. An example, a volunteer at a health NGO could divert medical supplies meant for community clinics and divert them to private buyers. Then, to cover up the fraud, the volunteer might manipulate the inventory records to show that the supplies were distributed to to the intended beneficiaries. False reporting and collusion with external buyers then ensures that the fraud remains undetected for significant periods of time. Let's look at the next one, which is corruption. This occurs in 41% of the cases, and maybe in our part of the world, maybe even higher. So, why is it so common? It's common because in NGOs, due to the close interactions between employees and external parties, such as their vendors, their contractors, and government officials, the temptation to engage in corrupt activities is going to be higher, especially where large contracts are involved or large sums of money are involved. How does this happen? So, corruption, we all know, involves things like bribery or kickbacks and also conflict of interest. Our staff might collude with external parties to manipulate the procurement process or contracts awarded in exchange for personal benefits. This type of a fraud can involve inflating contract values. They could also favor certain suppliers without competitive bidding and receive illegal gratuities. The lack of transparent procurement processes and oversight will facilitate this kind of fraud and corruption. So, as an example, a procurement officer at an education NGO could accept bribes from suppliers in exchange for awarding them contracts for school supplies. The officer will then ensure that the supplier wins the contract by manipulating the bidding process. The inflated prices are then justified through fake documentation, and the poor quality of supplies is often overlooked. The procurement officer will receive kickbacks and other personal benefits from the supplier. Let's look at the next type of fraud, which is billing schemes. And these occur in 30% of the cases. So, why is it so common? Billing schemes are common because of the reliance on external suppliers and service providers. NGOs often handle numerous transactions, making it difficult to scrutinize every single invoice thoroughly. And how does it occur? So employees can set up fictitious vendor accounts or they can collaborate with existing vendors to submit false or inflated invoices, or they themselves could create those invoices. Payments are made to these vendors, and the funds are then diverted to the employee's personal account. To conceal the fraud, the fraudster will create fake documents such as purchase orders and delivery receipts and manipulate account records to match the fraudulent transactions. As an example, a employee at a water and sanitation NGO could create a fake vendor account and submit invoices for non-existent water tanks. Then, to cover up the fraud, the employee might alter accounting records to show that the tanks were received and distributed. The employee might also create fake delivery notes and purchase orders to support the fraudulent invoices. Moving on to the fourth type of fraud, which is expense reimbursement fraud. This happens in nearly a quarter of the cases, or 23% of the cases. Why is it so common? So, NGOs frequently reimburse employees for travel, lodging, and for other expenses incurred during fieldwork and operations. The lack of stringent verification processes by these NGOs, it makes it very easy for the employees to submit false claims. How does it occur? Employees can submit inflated or entirely fictitious expense reports claiming reimbursement for non-existent or personal expenses. Common methods can include things like fabricating receipts, altering legitimate receipts to inflate the amounts, and claiming expenses for non existent travel or events. This type of fraud exploits weak oversight in the expense approval process, where supervisors may not thoroughly verify the legitimacy of the claims, or the supervisors themselves are actually involved in the fraud. So, as an example, field officer at a wildlife conservation NGO submits receipts for inflated travel and lodging expenses or accommodation expenses, claiming higher costs than were actually incurred. The officer might fabricate again some receipts or alter legitimate ones to support the inflated claim which they've submitted. The officer then ensures that the fraud remains undetected by exploiting the weak verification process in the NGO's expense approval system. Moving on to the next one, which is skimming. This occurs in about 15% of the cases. And why is it common? It's common because NGOs handle significant amount of cash donations, particularly during fundraising events. The direct handling of cash makes it susceptible to theft before it is recorded in the accounting system. So this is money being taken out even before it hits your systems. How does it occur? Employees or volunteers can divert cash donations before they are lodged into the official records. Common methods include pocketing cash collected during fundraising events, manipulating donations and donation records to show lower amounts, and colluding with others to conceal the theft. Skimming can be difficult to detect because it involves direct handling of cash, and sometimes the volumes can be quite high, or you can have many events, and therefore it's very hard to detect. An example could be during a fundraising event, a NGO volunteer starts to pocket cash donations even before they are counted or recorded. Then, to cover up the fraud, the volunteer might report lower donation amounts and then he can manipulate the records. The volunteer might also collude with other staff who might have seen this. They might have seen that there was high attendance but low recording. And therefore, the volunteer might collude with the other staff to ensure that they keep quiet and the fraud goes undetected. And obviously, they would end up sharing the spoils. The next one is check or payment tempering. And this occurs in about 14% of the cases. So, why is this common? Well, NGOs frequently use checks and electronic payments for transactions. Employees with access to financial documents and payment systems can exploit weaknesses in these processes. So, how does it happen? You find employees will forge signatures on checks or alter payment documents to redirect funds to their accounts. Common methods include forging or altering the checks, creating fake invoices and payment requests, and manipulating electronic payment systems. This type of fraud requires access to the organization's financial documents as well as knowledge of the payment processes. As an example, an admin assistant at a health focused NGO could forge signatures on checks to redirect payments intended for supplies to their personal bank account. The assistant might create fake invoices to match the older checks, thereby covering the fraud. The fraud is concealed through manipulation of financial records and collusion with other staff members. Then the next one is cash theft. This is common because NGOs, as we know, they often handle cash transactions, especially in regions where banking infrastructure is limited. The physical handling of cash increases the risk of theft. How does it happen? Employees or volunteers steal cash directly from collections, through donations, or by going straight into the cash register or into all the safe. Common methods include taking cash from donation boxes, misappropriating funds during cash handling, and falsifying records to cover up the theft. This type of fraud is often facilitated by inadequate cash handling procedures and lack of monitoring. And then finally, payroll fraud, which happens in about 12% of the cases. Why is it common? It's common in NGOs with large staff and inadequate payroll controls. So, the complexity of payroll systems and the lack of oversight can be exploited sometimes by employees. So, this is how it occurs. Employees and ghost workers can be added to the payroll, or they can inflate work hours to receive additional pay. Common methods will include creating fictitious employees, also altering timesheets, and then colluding with payroll staff to approve the fraudulent payments. This type of fraud exploits weaknesses in the payroll and HR processes. Next slide, Roger. Next slide, please. Now let's talk about the indicators or the red flags of fraud in non-profits. And recognizing the early signs of the red flags of fraudulent activities is obviously important because you can prevent your losses and also you can maintain the integrity of your operations. So, in this section, we're going to look at the various indicators of fraud, specifically tailored to the unique environment of nonprofits. And we need to understand and monitor this because it's only through the understanding and monitoring of these red flags that staff and volunteers can play a critical role in safeguarding the organization's assets. And we're going to explore three indicators across fraud as shown by the ACFE. And these, we're going to look at corruption, asset misappropriation, and also financial statement fraud. And we'll see that each category presents some unique challenges and requires vigilance to detect. So let's give you some examples of how to detect these red flags in these categories. The first one is unexplained wealth or lifestyle changes. Employees or executives displaying wealth or lifestyle expenses that seem disproportionate to their official income is a red flag. For example, if an employee suddenly starts driving an expensive new car or takes luxury vacations without a known increase in their personal wealth, this may signal corrupt behavior. The next one is the next red flag is resistance to providing information. Any reluctance to share details about procurement procedures or processes, how vendors are selected, how contractual decisions are made, all of this should raise some concern. This might manifest as consistently vague explanations, or unwillingness to allow the review of documents by auditors or other internal controls. If you find it's taking time to get information, things which obviously should be there are not being provided, then it should be a red flag. Then the next one is unusual supplier or vendor selection processes. So watch out for patterns where certain vendors are frequently chosen despite higher costs or lower quality, especially if the employee involved in the selection has personal connections to the vendor. And finally, you can look at bypassing normal procurement procedures. That's another red flag. So, instances where normal procedures or controls have been circumvented. You have a procedure, but they didn't follow it. For certain transactions, this can be a red flag. So, as an example, might be a manager approving a purchase that would typically require higher level authorization. Next slide, please, Roger. So now we can talk about the indicators of fraud in non-profits. And again, recognizing the early signs of fraud is crucial for preventing losses and maintaining the integrity of operations. By understanding and monitoring these warning signs, staff and volunteers can play a critical role in safeguarding their assets and also their reputations. We're going to look at four kind of asset misappropriation indicators. First one is frequent shortages in cash or inventory. So, regular occurrences of unexplained shortages in cash or inventory, these are classic red flags. These could appear as discrepancies between recorded inventory and physical counts, or cash registers consistently being short without proper, reasonable explanations. The next one is alterations or frequent corrections in financial records. If financial records are often being altered, or if there are numerous correcting entries without justifiable reasons, this could indicate attempts to hide misappropriations. So you find lots and lots of journals being passed, lots of documents being cancelled, and then other documents there. This is definitely a red flag. Next one is duplicate payments or unusual payments to vendors. So payments that appear to be duplicates or payments made to unfamiliar vendors, not previously part of the supply chain, this can indicate fraud and it's a red flag. It's especially concerning if an employee has control over both creating the vendor and approving payments. In other words, wherever you have inadequate segregation of duties, then you need to watch out for red flags. And I know in some NGOs, because of financial constraints, there's more trust, and people may be given uh, too many responsibilities. They could be double hacking. Now, in this particular case, you need to ensure that the double hatting does not create an opportunity for fraud. And then the last one is overriding or ignoring internal controls. Employees who consistently find reasons to override internal controls or ignore established procedures are exhibiting risky behavior. This might include making transactions that should exceed their authorization limits or bypassing the requirement for dual signatures on checks. So here are some of the red flags that you can look out for when you're doing your own audits, and for individuals who have the responsibility of checking these things. What I'd like to do now is to hand over my colleague Roger take you through the rest of the presentation. Roger?
Thank you, Zahir, and hi, everyone. I hope you're all well and can hear me clearly. I think I'll take you through a case study of a particular case of donor fund misappropriation. So a lot of what we're going to talk about today, in fact, everything that we're going to talk about today are things that we have actually experienced ourselves as investigators, things that we have seen in various nonprofits that we have worked with, from the ethical and financial impact of fraud that Zahir has talked about, up to the red flags of various types of fraud that he has just talked about. These are things that we have seen practically and we've seen firsthand. And we just wanted to start, or at this point, share a case study of a particular case of donor fund misappropriation that we were called upon to investigate. And this applies to a various number of cases that we have done thus far. So in this particular case, we were commissioned by a particular nonprofit to conduct an investigation into allegations of misappropriation of donor funds. So the organization was prompted by concerns by an anonymous whistleblower. So this whistleblower reached out to the organization and reported a case of the misappropriation of funds within the organization that they work with. So the first key thing that you can tell here is the whistleblower didn't go to the organization's leadership, rather they went directly to the donor organization. So obviously the whistleblower shared very alarming concerns about the donor funds in this particular case of being used to pay off other partners. There was instances of fraud, financial statement fraud, asset misappropriation, and corruption by various senior executives at the regional office of this organization. So they wanted us to investigate these claims. As many of you are aware, whistleblower allegations are simply that they're allegations, but they need to be investigated because more often than not, they're usually correct. So how we started our investigation was we did a thorough examination of the financial records, the grant agreements, we did interviews with the organization staff, We used our forensic accounting techniques to trace these funds, the particular grant funds that we were looking at, and cross-referencing them against the supporting documents and against the whistleblower's allegations, and scrutinizing all these documents to see whether these allegations are founded. What we found in this case were numerous instances of misappropriation of donor funds that were amounting to a significant amount of money that was being lost. There were discrepancies in the financial reporting. There was questionable expenditure that was being spent against the intended purposes of the grants. We also found very many instances of project fund mismanagement and payroll fraud. We were able to also identify the specific individuals who were involved in diverting these funds, and they were doing it for their own personal gain. And in this case, and also in many cases that we have seen, it was led by the CEO or the leader of that organization. So sadly, especially in our region of the world, a lot of the donor organizations are usually exposed to fraud by their own leadership. So the leader, either during the course of time, changes from being, a philanthropy venture to now actually using donor funds for their own personal gain. And we've seen this quite a lot. So part of our recommendations was the implementation of very robust policies and procedures. We told them to have very strict cash management protocols. A lot of this money was being stolen through cash withdrawals, which are obviously very difficult to trace. And then once they submit falsified or fictitious or even missing expenditure. Some of the documentation would just be simply missing. Then it's impossible to tell what this money was used on. We also recommended the standardization of their procurement documentation. So I think what we're now going to do, we're going to go into very specific sections where we're going to look at specific areas where nonprofits are prone to fraud, particularly based off of our experience. We're going to focus on 3 areas. The first one we're going to focus is on the procurement and contracting process. We're going to look at the project management process, and then we're going to look at payroll. These are the 3 key areas which we have seen organizations are usually faced with large amounts of fraud and misuse of donor funds. So particularly in nonprofits, in the procurement, nonprofits usually manage a large amount of funds and they distribute them through procurement projects, which make it a prime target for fraudulent activities. So the aim of this is to understand where fraud is most likely to occur in these processes. And then obviously this will help us to effectively to implement effective preventative measures. Let's look at some of the stages of the procurement process where fraud is likely to occur. So usually as nonprofit organizations engage in various procurement activities, they usually do this obviously to acquire goods and services that are necessary for their operations. So understanding the vulnerabilities within this procurement process is crucial because the procurement process has multiple stages from planning to evaluation. And in each of these stages is susceptible to various types of fraud. So each stage presents a very unique opportunity for unethical behavior and undermining, obviously, the efficiency and the integrity of the organization. Let's start with the very first stage, which we'll summarize by calling it the needs identification and requirement setting. Obviously, these are different across different nonprofit organizations, but these stages are usually the same. So the first one is the initial phase, which is usually where the organization defines the specific needs and the requirements of the organization. Usually, what we found is someone within the organization can manipulate this stage to favor certain outcomes. So fraud can occur in this stage when an employee, maybe someone in the procurement committee or someone in leadership or someone in the finance department exaggerates or invents needs to justify purchases that may either benefit them personally or may be used to funnel the business to predetermined vendors. So this might usually involve specifying requirements that are either unnecessarily stringent, or unnecessarily high, asking for unnecessary documents and so on. And this could be done to exclude many suppliers and to only leave you with the favored supplier. One of the measures that you can use to prevent fraud in this area is ensuring that the needs assessment is conducted transparently. So obviously this needs to involve multiple stakeholders, and then you have regular reviews and approvals from independent committees like internal audit teams and different committees. You don't have to always use, as Zahira mentioned, a lot of NGOs usually have tight resources, and so many individuals tend to double hat. You're maybe the finance director, but you also double up as the chair of the procurement committee, something like that. But it's usually good to have independent committees that will review this process to make sure that the decisions that are made are not biased. The next stage is budgeting and allocation. So here is where the budget for procurement is set. Here is also a very prime area because fraud risks can come up, such as excessive budgets for certain items, so that you siphon off the excess funds through over invoicing or purchasing. Inflated budgets can also lead to kickbacks from vendors because the vendor could be awarded a contract at an inflated price, and then you have agreed with them that we're going to quote double. I award you the contract, and then the excess you give back to me. Some of the preventative measures in this case can be budgets be done usually through market research that is verifiable, and looking at things like historical data, market pricing, so on and so forth, and then making sure that this process is verifiable and it is well documented so that anyone who's looking back at it can see the reason why you allocated a specific budget. External audits and comparisons with other similar projects can also provide some additional oversight in this area. The next stage is vendor selection and training. So this particular stage is where vendors are selected, and it's also highly susceptible to fraud, particularly through the tendering and bidding process. So some common fraudulent activities in this area could be collusion, as Zahira talked about, collusion between bidders and other organization insiders who collude to ensure that particular vendors are chosen, and then acceptance for bribes for these particular vendors to be chosen, and then manipulation of the bidding process to make sure that only certain vendors can qualify. This rigged bidding usually results in insiders leaking information to their preferred vendors. So either saying that we've talked about the budgeting process, so they can go and tell the vendor the budget for this process is for this procurement tender is X amount, so that the vendor puts that particular amount in the budget, and then this person inside the committee, the procurement committee, or the insider in the organization can come and say, let's choose this vendor because they fit our budget or they're below budget. And another area could be leaking the bid requirements or tailoring these bid requirements to match the capabilities of the vendor that you want to choose. Some of the preventative measures that you can implement here: one, you can have strict controls over the tendering process. So you can include the use of sealed bids, transparent bids, and even public bid openings. You can have rigorous criteria for bid evaluation, and then you can also rotate the staff involved in procurement and use external monitors, so that you can reduce collusion opportunities. The next stage is the contract negotiation and signing. So here is where obviously after you have selected a vendor, you negotiate the contract and you finalize and you sign. This can also be manipulated. So some of the types of fraud here can involve negotiating terms that are deliberately vague to allow for future manipulations. For example, we've seen instances in nonprofit organizations where the contract just says that this particular vendor was chosen for monitoring and evaluation, and it's left simply as that. There is no scope specified, there are no terms of reference, there are no deliverables, there are no payment terms. It just says that this vendor is chosen for monitoring and evaluation, and this is the amount that they're going to be paid. So obviously it's very vague, and it's impossible for you to know how this vendor was chosen, what exactly they're going to do. And obviously then it's also impossible for you to track that, and even to verify that the amount that they are being paid is worth the work that they're doing. So having vague contracts is a way in which fraud can be done here, and then kickbacks are done now during the execution phase. Contracts could also be approved with inflated prices, or with terms that include unnecessary add-ons that benefit the vendor more than the non-profit. Some of the preventative measures that you can have here to minimize the risk of fraud. One, you can ensure that all the contracts are reviewed by legal experts, and that contract terms are standardized as much as possible. So in your particular nonprofit organization, a lot of the big nonprofits usually have a legal team. Some of the small ones do not, but you can standardize your contracts to make sure that regardless of what you're contracting on, the terms are as standardized as possible to make sure that it is equal. And then you can also employ a dual approval system for contract signing. So not only the CEO or the chairman of the board, for example, can approve the contract, you can have 2 or 3 people to sign the contract and to review, so that one person may catch an irregularity that the other person may not. The next stage in the procurement process is procurement execution and delivery. So this is where the actual acquisition of the goods and services is done, including the management of the delivery and the receipt. So in this phase, we can have various types of fraud. One, you can have a delivery of inferior products or services. So someone delivers products that are not worth what you're paying for. The second thing is you could have a falsification of delivery records, and then kickbacks for accepting these inferior products. There might also be cases of phantom vendors, where someone is paid for goods that are never delivered. And we've seen various instances of these, both in nonprofits and even in our government, for example. One of the preventative measures that you can have here, you can maintain strict receiving procedures, including quality checks and even verifications against purchase orders. So you should have someone or a dedicated team who ensures that they review, if it's either physical delivery or service delivery, they review the contract terms and the purchase order to make sure that they have signed off against everything that you are meant to do. They can also have review of the quality of the work. They can also have regular audits and spot checks to deter any potential fraud and detect any discrepancies that are there. The last stage is the procurement monitoring and closure. So this is the final stage where monitoring the outcomes and evaluating the performance of the vendor is done. So if this is not done very well, it can also allow fraud now to go undetected. So these manipulations or fraud in this area could involve falsifying performance reports to cover up the fraud or inferior services. You can also have confirming the receipts of goods not delivered, or reporting inflated benefits from services that were rendered. So you say that this service obviously caused us to grow 10 times or 100 times, yet that is not the case, just so that you cover up the fraud. Some of the preventative measures that you can have here. One, you can implement performance tracking systems and ensure and require regular reporting from all stakeholders. So anyone who is involved should report regularly, progress updates, and so on and so forth, and to make sure that you are actively tracking and following the delivery by the vendor. You can also have independent reviews and feedback from end users who can also provide checks and balances. So usually nonprofit organizations have beneficiaries. A lot of the nonprofit organizations don't involve their beneficiaries in any of these areas. They just do it with their own people, but you can involve your beneficiaries. Say if it's a particular group of people that you're targeting, say it's women in a particular area or men in a particular area, you can involve them to come and provide independent reviews on, say it's something as simple as maybe a borehole that you're digging. Have your beneficiaries who would actually or who are actually on the ground come and give you feedback, and this can tell you whether the work that is done is either actually was done, or if it was done according to the standards. I think now let's quickly run through some common procurement fraud schemes. So understanding this is obviously very crucial to maintain the integrity of your procurement process. So let's look at some of the most prevalent schemes that we have seen in procurement. The first one is bid rigging. So bid rigging occurs, as I talked about before, when businesses collude to eliminate fair competition in the bidding process, simply put. So this can take several forms. One, you can agree in advance which company will win the bid, or you can even arrange for competitors to submit artificially high bids or withdraw their bids. Some of the impact of bid rigging, it can lead to inflated prices and can result in your nonprofit paying significantly more than necessary for goods or services. So you end up now wasting the valuable resources and even violating the trust of your regulators or your donors. Some of the ways you can detect and prevent bid rigging. One, you can implement a transparent bidding process with multiple independent reviewers, as we have talked about. This can mitigate the risk of bid rigging. You can have regular audits and use external monitors during the bidding process. And you can also maintain your procurement records. A lot of nonprofits that we have seen don't maintain procurement records. So if you're asked about a procurement decision that was made, say, a year back or 2 years back, you're not able to justify that decision. And if that decision is proven to have caused some either losses in the organization, then obviously you cannot justify that. So maintaining your procurement documentation from the tender committee meeting minutes, the quotations, the contracts, and everything that is related to that is essential. The next major type of fraud is false invoicing. So this one involves submitting invoices for non-existent goods or services. So you submit an invoice for a service or a good that was never delivered or was never done. And this can also include inflated invoices that also may reflect goods or services that were higher than was actually delivered. So you delivered maybe 10 books and you now submit an invoice for 20. Another instance is you submit duplicate invoices so that you receive double payment. And we've seen instances where a vendor produces a legitimate invoice, but also a duplicate invoice. So the person in the finance department is probably working with them to ensure that they are paid duplicate. And then the support, is the one legitimate invoice, and the other duplicate one is either is deleted from the laptop, from the emails, or it is removed. And then obviously they share this with the finance person. Some of the impacts it can have, obviously, it can affect your financial stability because it will cause the organization to pay for goods or services that it never received, or it can also cause you to pay more than you should have, therefore draining your very limited and valuable resources. Some of the ways you can detect and prevent false invoicing. One, you should have a rigorous verification of all invoices against purchase orders and receipts. So this can be done internally or externally through vendor audits, and this can help prevent this type of fraud because you're going to verify all invoices against all the purchase orders. Then, as you do this continually, you'll end up seeing whether there are any invoices that are submitted without any purchase order, without a contract, or without supporting documentation. You can also train your employees to recognize discrepancies in invoicing. This is also a crucial stage. A lot of the false invoices usually have many discrepancies. So either one, they may not have, say, an ETR receipt because obviously they may not be able to generate an ETR receipt for a fake invoice. They may not have the right vendor details. They may not have very specific things, like the logo and what, because usually fraudsters, when they're doing this sort of work, they many times make mistakes, and you can notice these mistakes and notice whether an invoice is legitimate or not just by looking at it keenly. The third one is vendor collusion. This is a third major type of procurement fraud. So this one involves two or more businesses conspiring to defraud the organization, but in this case, by manipulating the outcome of procurement tenders. So often it's done by excluding other potential fair competitors or by coordinating your pricing to increase the procurement costs artificially. So this one is usually done for very specific areas. So, for example, in construction, where the costs are usually very similar, but you'll find two vendors colluding to submit a very high bid, and obviously these will be the vendors that you're two or three vendors that you're looking at, and if all their bids are artificially high, you have no option but to choose one of them, and they have colluded, so obviously you end up paying more than you could have paid. So, like bid rigging, it also ensures that competition is stifled, and it leads to higher costs and less optimal outcomes for your nonprofit. Some of the ways you can detect and prevent fraud in this area, this particular type of fraud: one, you can encourage a competitive bidding environment by maintaining confidentiality in the tender process. So you need to have a very confidential tender process where you don't just reveal who is tendering for what. You can have sealed bids, you can have rotating vendors, and even procurement officers who can reduce opportunities for collusion. You can also have analytical tools that screen for pricing patterns and compare the bids to industry standards. So you just look at if it's a particular cost, you compare it to the general industry standards and verify whether you're paying more or you're paying price that is fair. Another major type of fraud is kickbacks. So this is a scheme where a vendor offers a bribe to the procurement officer or the person, the decision maker within the organization, to influence the procurement process in their favor. So usually the person making the decision will receive cash or gifts or even a service in return for treating the vendor favorably in the procurement process. Some of the ways that you can detect this is you can have strong policies and ethical guidelines. You can have a regular ethics training and clear and anonymous reporting mechanism for any unethical behavior to combat any kickback. The last one is change order schemes. So in this particular type of procurement fraud, after securing the contract, the vendor may attempt to increase the contract value through unnecessary or artificially highly priced change orders. So usually the vendor will bid low, so that they make sure that they win the contract. So they bid lower than the competition. And then they charge extra for changes and additions, like project extensions. Sometimes, if it's particular cases, it's building something, and they say, oh, we didn't include this cost, we need to add this, we need to add this. So obviously you end up paying much higher than you would have paid any other vendor and much higher than this vendor had quoted. So how you can detect this type of fraud is by limiting and tightly controlling any changes to your contracts. You can also require detailed justifications for each change order or each new contract that is submitted, and ensure that they're independently reviewed to prevent the type of fraud. Now let's look at how you can design controls to detect and prevent procurement fraud. So you need to have a general guide on methods for designing controls that can detect and prevent any types of procurement fraud that you may face in your organization. So the first one is segregation of duties that we've talked about. So basically, this is ensuring that no single individual has control over all aspects of the procurement process. Thereby obviously reducing the risk of unauthorized actions. So how you can do this: one, you can separate the roles of requisition, purchasing, receiving, and invoice processing among different employees. So every employee is doing something separate. This division now will prevent one person from having control over the entire area. You can also rotate duties. So regularly rotate employees through different roles. You can have a procurement committee that is rotated every 3 months or every 6 months. So in this case, it's every one person from each department of the organization is represented, and they're rotated. This will obviously reduce the opportunity for one individual to develop any fraud schemes, because fraud schemes usually take time. The second one is standardizing your procurement procedures. So this is basically creating a transparent and consistent approach to procurement, and this reduces the opportunity for fraud. One, you can develop written and clear policies and step-by-step procedures for every step of the procurement process. You can also establish thresholds for required approvals on purchases. So if it's a purchase, so let's say up to 50,000, it requires one person to approve. Up to 500,000, it requires two people to approve, and it mentions who is meant to approve. And then if it's up to 1 million, it requires three levels of approval, the final approver being maybe the CEO or the board chair or something like that. So this will obviously ensure that higher value transactions undergo more stringent reviews, because someone will obviously look at what they're approving before they approve it, as you expect. The third one is having a list of approved vendors. So this is having a list of vendors who have already met your predefined criteria for quality and reliability and even pricing, and continuously updating and using this list. So this ensures that you don't have any vendors who are out there just to defraud you. The next one is comprehensive contract management. So here, you need to have controls to maintain control over the entire life cycle of a contract. So this will ensure compliance with your terms and detect any deviations that will indicate fraud. Some of the ways you can do this one is designating specific staff members as contract administrators who are responsible for overseeing each contract's fulfillment and ensuring its compliance with your terms and conditions. You can have specific performance milestones within contracts. For example, for us, if we are doing a particular investigation, for instance, we will have a specific time which we are paid. So either on mobilization and then on delivery of the report. And it's obviously different, with each industry. And you can also have regular status reports and deliverables to monitor compliance with your contract. You can also include or introduce periodic contract audits, to make sure that the terms are being followed and to verify the accuracy of the reported progress. Sometimes nonprofit will submit a contract and the person who wins, and they just expect you to deliver within this particular point in time because it's already budgeted, in the nonprofit's budget, it's budgeted, so they have to contract, so they do it and they forget about it. But I think it's very key to have to manage and monitor your contract comprehensively. The fourth one is regular audits and reviews. So here we've talked about it very much. One can have scheduled and even random audits of procurement records and the practices. You can have third-party external auditors who come and review your processes and controls within your procurement periodically to uncover any issues that you may have. Then you can also have feedback mechanisms where employees can report suspected fraud in procurement. The fifth one is what I talked about earlier, procurement documentation and record keeping. So here is ensuring that you keep all your procurement documentation well. And this usually ensures that you have a very clear audit trail that can be reviewed at any point in time in the future for any signs of fraud. So one, you can have a document control system. So this is just basically a system that organizes and stores all your procurement related documents, such as your RFPs, your bids, your contracts, and even your emails between the vendors. Even these ones are key procurement records that need to be kept. And this should allow for easy access during audit and review. You can also have a record retention policy. So this is a policy that says for how long you're going to keep different types of procurement documents. And this is usually based on legal requirements, but you can also base it on your organizational needs. You can also have version control. So this is ensuring that all your documents, especially your contract modifications and agreements, are subject to a very strict version control and approval process. So this is to obviously prevent any unauthorized changes or manipulations. And the last one is detailed supply evaluations and pre-qualification. So this is ensuring that your suppliers are thoroughly vetted before they enter the procurement process. And this will obviously reduce the risk of collusion and fraud. How you can do this? One, you can have a very clear supplier pre-qualification process. So you can develop a formalized process to assess any potential suppliers, and this can be based on their financial reputation, the quality of their goods, their past compliance. You can even source for referrals, and this will obviously help you in identify suppliers who are either unreliable or who are highly priced, and or who even those ones who are likely to engage in fraudulent activities. You can also continuously monitor your suppliers. So once you have selected a supplier, you continuously monitor their performance and their compliance to the contract terms regularly, so that any changes in their conditions or in their service delivery can let you know that there's something going on. You can also have clear and documented criteria for evaluating your suppliers, which can help avoid any subjective decision making. Usually you'll find that, one person or two people in the committee made the decision based off of whatever they discussed in the committee, in the procurement committee, and sometimes it's not captured in the minutes. But if you have clear and documented criteria for evaluating your suppliers, then this will avoid one person or two people making decisions that would obviously create an opportunity for favoritism or corruption. So now that we're done with the procurement process, we'll move on to project fund mismanagement. This is also a very critical area in nonprofit organizations because a lot of the work, if not all the work that majority of the nonprofits do, is projects, and they obviously have different stages and different resources that are allocated. And having an effective project management process ensures that your resources are allocated efficiently and they're used appropriately, and that the projects achieve their intended purpose. So here we're going to look at how to manage your project funds properly. And this is obviously with the intention of not only minimizing the risk of financial mismanagement, but also building trust among your stakeholders, your beneficiaries, your donors, and any other people who are involved. So this is we're going to look at some of the indicators or the red flags of project fund management or project fund fraud. So obviously, as was talked about before, it's key. It's very important for us to understand these red flags so that we can detect the signs early, and prevent any significant financial loss from our organizations. The first one is unexplained variances between your budgeted and actual expenditures. So here is where you find discrepancies where the actual spending that is done significantly exceeds your budget allocations, and this is usually without a corresponding explanation or approval. So these variances will obviously suggest that the funds are being used for unapproved purposes, so either for personal gain or to cover up other misappropriations, or sometimes even to pay off other project donors who have previously uncovered fraud in your organization. So, for instance, you budget 20,000 for particular materials, but you end up spending that $5,000, and this is without any documented reason or any corresponding increase in the program delivery or corresponding increase in the materials that you're meant to procure. The next one is frequent overruns or requests for additional funding. If you find that there are continual requests for extra funds beyond the initial budget, and this is again without justifiable cause, this can also indicate poor financial planning, or it could indicate the intentional inflation of costs. And this could be a strategy to divert funds for inappropriate uses. So, for example, a project that consistently claims for unforeseen expenses every quarter. So every quarter you have unforeseen expenses. You have something that you had not planned for before, but you're requesting for funding for that. And then more often than not, they're not aligned with the overall project milestones or objectives. This is another red flag for project fund fraud. The third one is delayed or incomplete financial reporting. So if you find that there are consistent delays or failures to provide complete financial documentation, this can also be a strategy to hide the embezzlement of funds or misallocations of funds until the perpetrator can cover up these discrepancies. So obviously, with a lot of nonprofit organizations, they need to report on the grants that they're given. They need to give a financial report, and they usually key financial documents that they need to provide to show that. And a lot of them will also include their supporting documentation. But if you find that you're consistently either the donor organization or your organization is consistently failing, delaying, or failing to provide a complete financial report, you find that they're probably cooking up something just to hide the fraud that is going on. The next one is a lack of documentation for expenditure. So this is obviously a lack of supporting documents such as the receipts, invoices, contracts, and this will obviously hide the fraud, and it will make it impossible for you to verify whether the expenses are legitimate or whether they are appropriate, according to what you had agreed in the grant. And this obviously creates additional efforts, additional opportunities for misappropriation, because if you can't verify, and a lot of NGOs may not be able to verify, let's say your nonprofit located in a different country from your partner, then you're not able to verify, the supporting documents, whether they're complete, whether they're legitimate. Then it will obviously, the people within the NGO will notice that these people are not looking at the supporting documents. So it creates opportunities for fraud. A fifth one is bulk cash withdrawals or bulk cash expenditures. If you find frequent or large cash transactions, this is usually a very high indicator of fraud, because cash is particularly vulnerable to theft because of its liquidity, and the fact that once you withdraw cash from the bank, then there's no more audit trail. If you fail to provide a receipt, for example, or an invoice for the cash that you've spent, then it is obviously impossible to tell what you spent the cash on. You can also provide a fictitious invoice, and it's hard for you to verify whether this invoice is legitimate or not. So if you find that either your partner organization or your own organization is continuously withdrawing the cash in large tracts instead of either doing direct bank transfers or mobile money payments and so on, then this is something that will indicate fraud. The last one is an improper authorization of expenses. So if you find that either your organization or your partner organization is continuously approving expenses that don't comply with organizational policies, or spending spending limits and authorization hierarchies, this suggests a breakdown or intentional override of your internal control. So if you find that, for example, a high-level executive approves an unusually expensive procurement that normally would require board approval. Remember what you talked about, the three-stage approval process. So you find that this person is meant to approve transactions up to this stage, but they're approving transactions that are even triple, the stage that they're meant to approve. Then this normally indicates that there's fraud, possibly because they want this money to be paid to their vendors so that they can get a kickback. Some of the best practices in project budgeting to prevent fraud are things that we can also look at, because effective budgeting in your projects is, I think, key in ensuring that your nonprofit either sets a foundation for project execution, but also acts as a critical control mechanism to prevent any fraud. Because a well-planned budget will limit opportunities for misappropriation and will ensure that your funds are allocated and used according to the organization's objectives and also your donors' stipulation. So one of the ways that you can have good project budgeting, one, you can have contingency planning. So here is let's start with comprehensive planning. So here you can involve project managers, financial officers, and other key personnel in budgeting to ensure that all aspects of the project are covered, but to ensure that there are no budget overruns. Two, you can use historical data and benchmarking. So you can leverage data from either past projects or from online sources or from other referrals to ensure that you identify reasonable cost estimates and prevent over budgeting or under budgeting. The third one is incorporation of internal controls. So here you can have a multi-level approval process for the initial budget and any subsequent modifications to the budget. And you can also require detailed justification documentation to ensure that any changes are legitimate and they are necessary. The fourth one is technology utilization. So you can have financial software that will support you in budgeting, forecasting, and planning. Excuse me. You can also regularly review and monitor your budget. So this is just reviewing your budget and comparing the actual expenditures against the budget to verify that there are no discrepancies or misalignments. We had shared, one of the other ways that you can find fraud is by seeing that many times there are budget overruns. The next one is transparency and communication. So this is having a very open budgeting process that is transparent and communicates openly with all your stakeholders, including even your beneficiaries, like we had said, about your budgeting policies, your procedures, and even the rationale behind specific budget allocations. So this will ensure that there's accountability, and that everyone is aware of what you're doing. And this makes it also difficult for you to commit fraud. The last one is what we had shared earlier, contingency planning. So this is having a contingency line item to cover any unforeseen expenses. It's usually a small item, but it's key to ensure that all this use of funds that is unforeseen is documented, it is planned for, and it is covered in that area. So this will help you make sure that there are no high levels of misuse. Then we're going to look at best practices in project disbursements. So obviously, after project budgeting, we need to know the best practices in project disbursements to prevent any forms of fraud. The first one is controlled payment authorization. So this is what we talked about before, having multi-level approvals for your disbursements, especially the large sums. And having also authorization limits. So establishing very clear limits on what level of staff can authorize what level of project disbursements. So this will limit any potential disbursements and ensure oversight. The second one is having a secure and standardized payment process. So this is utilizing secure and vetted payment gateways for transactions. One instance that we've seen is a particular nonprofit where they get money, for example, in USD, they get money in dollars, but we're obviously in Kenya, so they need to convert the money to Kenya shillings. So they will take that money, instead of converting it through the bank, which is a secure and verifiable way, or through other secure, verifiable currency exchanges, they take the money and they go to some currency conversion places that are not verifiable. They change the money and they return the money back to the bank. So the money they return to the bank is as per the current rates. But obviously, if they've gone outside and they have no documentation to show, they could have gotten a higher rate. And it's impossible for you to know that. And obviously, with the large sums of money that donor organizations receive, even just a slight change in the rate, a slight mismatch in what you reported and what you actually used to convert a dollar amount or a euro amount could result in high amounts of losses for the money. So using secure and vetted payment gateways for transactions is a very key step to minimize any risks here. The other one is to avoid cash disbursements, again, to minimize any risks. The third one is supply and vendor verification. So this one it involves doing due diligence on new vendors and regularly reviewing your old ones to verify the vendor information, including the banking details and so on. And then having regular updates with your vendors to review and approve your vendor lists. The next one is regular reconciliation and auditing. So having regular reconciliation of your bank accounts and your disbursements to ensure they match they match any authorized transactions. And obviously this will help you identify if there are any discrepancies. Then also scheduling surprise audits, that will come and review your disbursement records and your processes. And surprise audits can sometimes find disbursements that were, illegitimate and they were not yet covered up. The next one is documentation record keeping. So having complete documentation that is supported with everything that is necessary, such as invoices, purchase orders, receipts, and delivery notes that are signed, and maintaining these records securely in an organized way. The next one is employee training and awareness. So this is training your employees on the risks of disbursement fraud and ethical standards that you need to maintain for your organization and so on. I'll quickly run through them in the interest of time. The next one is the use of technology. So having an automated disbursement system. A lot of banks nowadays will have automated disbursement systems. If you need to pay money, say participant transport reimbursement or so on and so forth, and you need to pay this to your beneficiaries, you can have your bank set you up an automated system, and that all you need, for example, in our country is their mobile number, and the bank will automatically send this money from your bank account to each individual's mobile money account. The last one is having transparent communication. So this includes open channels for communication and having regular updates with your staff. We'll go on to the best practices in monitoring your project funds effectively to ensure that they are used well and they're used appropriately to achieve the intended project outcomes. So here it's the same steps as before. One is segregation of your monitoring responsibilities. So having different people doing different monitoring responsibilities will ensure that your projects are monitored effectively. Having stakeholder engagement and feedback, this will ensure that you can monitor how your funds are being used, whether the expected beneficiaries are receiving the money that they intended to receive, or the care or the services or the goods that they intended to receive. The third one is clear monitoring guidelines. So a lot of the monitoring, as I said, you find that an organization just says that we did monitoring and evaluation, yet they've not specified what exactly that they did in this case. So you need to have very clear monitoring guidelines that will tell you what you need to monitor depending on the particular project. And it is smart and clear indicators that will track the progress and the effectiveness of the fund usage. And the last one is regular financial reporting. So this is having regular financial reports from your project managers or your project staff that will detail all the expenditures, the budget status, and any variance analysis that is there. And this can be done either quarterly or monthly or even yearly. And also this includes having real-time access to the financial data so that you can have timely adjustments and make decisions in advance. The last one that we'll talk about and emphasize on is the importance of segregation of duties. So segregation of duties, as we all know, is a very fundamental principle that reduces the risk of fraud and error in any organization. And we're going to emphasize a lot on this because a lot of the areas or the nonprofits that we have worked in, as we had mentioned before, will involve double hatting. So that it's one person either doing 2 or 3 projects or doing 2 or 3 roles when just because of budgeting constraints, because of salary constraints and so on. But segregation of duties is a key aspect to ensure that no single individual has control over all aspects of a critical function, because having this control that is usually not monitored is what will cause fraud to occur. So some of the importances of segregation of duties: one is lowering preventing fraud. So obviously this will lower significantly the risk of intentional fraud, because if you have one person, more than one person to complete critical tasks, the opportunity for misappropriating is greatly reduced. For example, if one person is responsible for the approval of expenditures and the other person for the actual disbursement of funds, and then a third person for recording the transactions. So this will make sure that this one person cannot approve, cannot disperse, and cannot record, because all of these need to be done by separate people. So it makes it very hard for this one person to steal or to commit fraud in this area. because it makes it, difficult. The second one is enhanced accuracy. So when duties are segregated between different staff, errors are more likely to be identified and corrected. So if different individuals are handling different aspects of a process, such as initiating a process, recording, and reviewing transactions, this provides a system of checks and balances. And obviously, this will prevent errors from being made and will also facilitate any errors to be detected early on and corrected early on. For example, if there are discrepancies that might be overlooked by one individual, say rounding area errors in the finances and so on, but when one other person looks at them, they're likely to be caught. A third importance of segregation of duties is improved internal controls. So as we said, segregation is a critical component of an effective internal control system, and it will ensure that no one person has singular control over an entire process. So this will obviously promote operational efficiency and will help you adhere to your organization's policies and regulations. The fourth one is increased accountability. So one person will, every person within a project will have their particular roles and responsibilities. And if you have a clear delineation of tasks, it will enhance accountability because it becomes easier for you to identify who is responsible for what actions. And this is obviously critical to ensure that not only you can track the progress of your particular area, also maintain your standards and ensure that all team members are fully aware of their responsibilities and of the importance of their contribution. If all the people are aware of what they're supposed to do and they're aware that if they fail at what they do or if they commit fraud at what they do, then it will be caught by the next person, then this reduces the risk of fraud. The last one is enhanced transparency and trust. So by implementing segregation of duties, the organization will demonstrate its commitment to transparency and ethics, and this will build trust from with internal stakeholders, such as your employees and your management, but it will also build your reputation from external stakeholders, such as your donors and your investors and your regulators, because when such people see that their organization takes a proactive step to prevent fraud and ensure integrity, then they will have confidence to fund your organization and to continue to support it. At this stage, I'd like to hand over to my colleague, Nicholas, who will take us through the next steps of payroll and human resources.
Well, thank you, Roger. I think now I will quickly and comprehensively take you through the payroll and human resources fraud. And in this section, we are going to analyze and look at the various frauds that can take place in the payroll and human resources. And this is actually a critical area in any organization because you find that nonprofits, especially, there's a potential for fraud. And when fraud happens, it can significantly impact the financial and operational integrity of that entity. And it is important to understand that in this section that understanding and addressing the fraud in these areas is essential not only to protect the assets, but also the reputation of the organization. And we find that payroll fraud is one of the most common types of fraud affecting businesses, and especially the nonprofit one. And human resource fraud can undermine an organization through corrupt hiring practices, nepotism, or even manipulation of employee data. And we will focus majorly on identifying and understanding and also preventing fraud within the payroll and HR departments. And we will also look at how effective management and oversight in these areas can be very crucial, not only for maintaining financial controls, but also for fostering a trustworthy and secure workplace and environment. Now, I think we can go to the next slide, and we'll start by understanding the common types of payroll frauds or HR frauds practices in nonprofits. And this is essential because it helps us establish effective preventative measures. And these fraud practices, you find that they can range from various aspects, from minor aspects to substantial and huge aspects, which involves schemes such as falsification of hours or even manipulation of the payroll data. And this happens particularly when there's a collision between senior personnel and other personnel in the entity. And when we recognize these signs and continue to implement strong controls in nonprofits, then we can protect the resources, and also we can ensure that funds are used appropriately, and also we can ensure that the funds are used to support the relevant and authorized missions of that entity. Now we look at the various kind of frauds and that we have in the nonprofits. We can have ghost employees, and we find that ghost employees, this can occur when someone who does not work in an organization appears on the payroll, and this particularly could be a fictitious person or even a former employee whose records were never deactivated. And payroll checks issued for these employees are typically intercepted and cashed out by the fraudster, often an insider with the access of the payroll system. And the second kind of fraud is falsified hours and wages. And in this kind of fraud, it involves employees claiming compensation for hours not worked for, or even manipulating the payroll system to increase their wage rate. This also requires collusion between employees and supervisors and exploitation of weaknesses in timekeeping systems. So this gives us the importance of having good systems in our entities. And the third type of fraud is commission fraud. And this is where this happens particularly where employees earn commissions, and it may involve inflating sales records or even fabricating transactions to meet targets or boost earnings illegitimately. For instance, you might find that a fraudster can, in a fundraising role, can fake donations to increase their commission, and potentially altering the donor records or even creating fictitious donor accounts. The fourth type of fraud that we are going to look at is the benefit fraud. And the benefit fraud occurs when employees obtain unauthorized benefits and that they are not entitled to. You can find an employee is obtaining health insurance or disability payments or any other financial advantages that may be there through deceit or manipulation of information. And this can happen if an employee can, maybe I can give an instance, if an employee can falsely claim a higher number of dependents to receive benefits or exaggerate a medical condition to claim disability benefits that might come with that. And the fifth kind of fraud that we're going to look at is the pay rate alteration. This kind of fraud involves unauthorized change to an employer pays, and it could be initiated by the employee with the access to the payroll system. And here we are seeing another scenario where an insider person is used, and someone especially who has the access to the payroll system, and they can make unauthorized changes for personal gain or to favor another employee. And the sixth kind of fraud that we look at is unauthorized bonuses. And in this situation, you find that it involves issuing or approving bonuses without proper authorization or outside the established policies and parameters that we have in an entity. And this may be done personally to benefit or favor certain employees, or it might be done to favor the individual doing the fraud itself. And I'll give an instance where a department head can approve substantial year-end bonuses for themselves and select team members, despite these bonuses being approved by organizational policy or linked to performance metrics. And now the other kind of fraud that we look at is time theft. And this occurs when employees get paid for time they did not work for. And this can include body punching or having another employee clock in or out for them, or even taking longer breaks than allowed without adjusting time records, and even not working while clocked in, or not working while clocked in. And the last kind of fraud that we look at is the fabricated payroll records. In this kind of fraud, we find that it happens when there is a mismatch between the amounts recorded in the payroll logs and the actual amounts received by the employees. This can indicate unauthorized alteration, embezzlement, or errors in the payroll processing. We can go to the next slide where we will look at the various red flags that are HR related. And we find that human resources as a department usually plays a pivotal role in maintaining the integrity and ethical standards within an organization. And it is important that we recognize these red flags because the human resource professionals, especially since they are the gateways and the first line of defense against unethical behavior, then it is good that we look at these red flags so that we might have a clear understanding. And in this case, we will use the ACFE report, the 2024 report to the nations, that indicated that 45% of fraud perpetrators displayed behaviors that could have tipped off their organizations to their fraudulent activities. And it's important to use data because it helps us understand and to keep tabs on the areas that we will concentrate on more and more. One of the red flags that we look at is proper performance evaluation. We find that employees who consistently receive negative feedback, they might feel targeted or they might feel alienated, and this could drive them to engage in fraudulent activities. And this could be as a form of retaliation or even to compensate perceived unfair treatment. And this kind of red flag can be mitigated by implementing a comprehensive performance improvement plan. And this improvement plan should offer clear, achievable, and regular feedback and provide access to mentoring and training opportunities and support to employee development. And the other kind of red flag that we're going to look at is the fear of job losses. And in this case, we find that it is a normal human reaction that an insecure job condition or threats of layoffs, these things can create significant stress for employees, and they can potentially push them towards fraudulent activities. And the fraudulent activities will be a psychological response to caution them against financial uncertainties. And one of the things that you can do as a department to mitigate against this kind of fraud or this predisposing factor is to communicate openly and frequently about the company performance and the future outlooks to reduce uncertainty. And also, it is important that you offer clear development and planning resources, as well as financial planning services. And this will help your employees to manage stress and plan for potential job transitions. The third red flag we will look at is the denied raise or promotion. And in this case, we find that some employees might feel stuck or they might perceive a lack of growth opportunity in an entity. And this will happen especially after denial or expected promotion or even any raise. and this may resort to fraud as a misguided means to achieve their financial goal or demonstrate their discontentment. And in this case, we find that as a department, when you create a transparent criteria for promotion and races, and these criteria should be communicated clearly to all the employees, then you find that you might be able to mitigate this kind of predisposing factor from affecting your organization. The fourth red flag that we are going to look is the actual job loss. And you find that there are some employees who have been informed about impending job losses or terminations. And in this case, you find that they might retaliate by being fraudulent and steal company assets or funds as their way out. Therefore, as a department, you should strengthen security measures to ensure the termination process, including the immediate revocation of access of company system and continuous monitoring of activities. And also conduct exit interviews well to gauge the departing employees' sentiments and address any grievances that could lead to retaliatory action. We'll go to the next slides in the interest of time, and we will look at the roles of HR in fraud detection and prevention. We will go straight ahead and look at one of the roles that the HR department has, or the HR personnel, is background checks. The onboarding process of a new employee involves conducting their background checks for potential hires, and this will include criminal history, credit checks, verification of previous employment, and also education verification. And this can help you identify any red flag or potential risks related to fraud. Also, the department should offer ethics and compliance trainings, and this can educate employees about the organization's code of conduct, policies, and legal requirements, and this helps create a culture of transparency and integrity, and in turn, this will reduce the likelihood of fraudulent activities. And the third role of the department might be, or will be, policy development and communication. The HR department is instrumental in developing and communicating policies related to fraud prevention and also reporting mechanisms. The fourth role of the human resource department will involve internal reporting and mechanism, and the HR will establish and should establish and manage a whistleblower program that will provide the employees with a confidential channel to report suspicions or incidents of fraud. This creates a safe space of anonymous reporting and anonymous reporting mechanisms, and also it encourages the employees to come forward with information that may be relevant for it to raise any whistleblower allegation or any red flag they might have observed. And then the last thing we are going to look at is the segregation of duties. And you find that HR can collaborate with other departments and also can outsource some of these services. This will ensure that duties are separated, and this will help in preventing one person approach from having too much control over a process. And I think in the interest of time, we will go straight to the summary findings of this presentation. Perhaps now we can go to the Q&A session. Thank you.
So thank you, Nicholas. So to quickly summarize what we've learned today, we talked about the introduction to the occupational fraud that was done by Zahir. We looked at the ethical, financial, and operational impacts of fraud. We looked at the most common types of fraud in nonprofit organizations, some of the indicators of fraud in these nonprofits. We looked at a case study, and then we went to some of the stages where procurement fraud is likely to occur and how to design controls to detect and prevent procurement fraud. we went to fund mismanagement or project fund fraud and looked at some of the indicators and some of the best practices here. And finally, we finished with payroll and human resources fraud. At this stage, I'd like to ask if we have any questions that we would like to take. We'll quickly summarize this because I think we have quickly gone over time. Regarding the slide sharing that I can see many people asking, we will be uploading this webinar recording on our YouTube channel shortly after this. I think we'll send you all the link and you can rewatch this and look at the slides from there and even our explanation. Okay, there'll be no questions. Allow us to end here. Thank you for everything and thank you for attending. And sorry for going, I think, almost 30 minutes over time. And we hope to see you again soon. Thank you and have a good evening.